Incorporated in 1994, CCL Products has been in business of processing of the green coffee, and it is the largest private label instant coffee manufacturer with plants in India, Vietnam and Switzerland. In our Ideas for Profit today, we'll discuss if the stock will give the right blend to your portfolio. CCL exports to nearly 90 countries and sells nearly 200 unique blends as well. Now, CCL does not own any coffee plantations there is. Also, it procures the green coffee from Chikmagalur, also that is in Karnataka, and also imports a wide variety like say Robusta and Arabica from Vietnam and Ethiopia respectively. And then it does the processing of coffee. Now, it mainly caters to the B2B, that's business to business segment of the market, and in 2016 it did foray in the B2C, that's business to consumer segment as well, by launching its own brands. Now, in the B2B business model, CCL works largely on the cost plus model. The fluctuation in coffee prices here do not impact CCL to a large extent. Now, majority of the customers place their requirements about 6 to 8 months in advance, and CCL books its coffee requirement back to back as well. Now, CCL derives nearly 55 to 60% of its revenues from the large customers who buy around 1,500 to 2,000 tons per annum. Now, also it provides order commitments for the next to 12 months as well. Now, another 20 to 25% of its volume is actually derived from the small regional players who buy about 100 to 150 tons annually as well. Now, in FY20, CCL commissioned the Greenfield freeze-dried coffee plant of 5,000 MTPA, that's million tons per annum, at a total capex of 300 crore rupees. In FY20, the capacity utilization stood at 50%, which is likely to touch around 75 to 80% in FY21, and the optimum utilization of about 90% in FY22. Now, this coffee has a much higher realization compared to the spray-dried coffee, which will help in posting higher gross margins going forward for the company here. Now, in the B2 side of the business, it did target the retail consumers, and this was under the 100% or wholly owned subsidiary Continental Coffee Limited. Now, in FY20, it also reported revenues about 77 crore rupees and the net loss of 3.5 crore rupees. Now, in H1 FY21, the reported revenues of 60 crore rupees and the target to reach of revenue about 100 crore rupees in FY21 on the back of healthy traction also is something that the company is looking at. Now, currently the market share is around 4 to 4.5% in the South Indian market, and once CCL really reaches 5% market share, it actually plans to introduce in the tier 1, tier 2 cities of India as well. Now, 90 to 95% of the retail coffee market is currently with Nestle. When you talk about brands like Nescafe, and also HUL, which has brands like Brew. Now, revenues for the September quarter grew by 8%, and that was on the back of 7% volume growth. The volume growth was mainly due to the strong operations in Vietnam unit as well. Also, when you see the gross margin expanded by 300 basis points this time, and that was due to a favorable mix. Now, higher proportion of the freeze-dried coffee from SEZ unit in India also led the recovery this time. Now, processing of coffee is a tricky business, and the processors of coffee do make the maximum possible profits in the value chain. CCL is in the value-added segment and is now entering the small size packs as well, and this, along with the large client base and also the long-term relationship that it has, definitely puts it in the attractive space. Now, despite being an exporters to say various countries, CCL bills the invoice in US dollars, and that is in order to mitigate the risk of the higher depreciation in other currencies. Now, also CCL has guided for healthy utilization rates in FY21 on the back of improving demand outlook. Also, that is across markets, say like Russia. Also, the onset of peak coffee season from H2 FY21 and also the addition of new clients. Now, based on our projections, CCL is actually trading at a PE multiple of 17 times FY22 earnings. Investors, however, with a long-term view, can definitely look at accumulating CCL products in their portfolio.